GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as rewarding as finding cash in last year's winter coat. I'm your host, Jay Hamilton, and today we are joined by Frank Chaparro, founding reporter and director of special projects at The Block, also a fellow podcaster over at The Scoop. Great show, by the way. Today, we're going to talk about what happened in the past 2 weeks. This is our first show back after the holidays. We had a bunch of pre-recorded episodes for you guys, and I'm so stoked to be back and kicking off 2025 with all of you. Oh, baby, it's going to be a big year. So we're going to talk about what happened. TLDR, you didn't miss a lot. Good time for a holiday. We're also going to talk about Trump is getting inaugurated in just under 2 weeks, January 20th. We're going to look at some expectations there. We're going to talk about how the Bitcoin debasement trade continues to gain attention. JP Morgan putting out a report around that. And we're going to talk a little bit about our favorite TradFi stock, Coin, that's Coinbase, and some projections that have come out there and why we are continue to be so bullish on Coinbase. Before we jump in, guys, 2025 is going to be a huge year for us, for you, for your portfolio, for it all. And you can help us make it a big year by smashing the like button, subscribing wherever you're listening. It'll help us bring on more great guests to the show. We'll just take 1 minute to hear from our sponsors who make this show possible. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Frank, welcome to the Milk Road Show.
Thanks for having me. I like the breath at the beginning of the show. I feel very zen.
Oh, that's nice. You know what?
Also, I haven't even recorded a show yet this year, so you're making me feel quite hapless over at the Scoop. I don't think our first show's till Wednesday.
Oh, that's okay. This is a little prep show for you. We'll get you ahead. That's what we do at Milk Road. We're always on it every day. Okay,
Evidently.
let's start off with just a little bit of a recap of for everybody who did take time off over the holidays, which I hope you all did because you deserve it. If you were down in Florida like Frank, or if you were like me chasing winter across Canada with my various relatives. But if you take a look, let's take a look here. Let's just get up to date, Frank. Okay, so Bitcoin had its pullback that we all sort of expected to happen, pulled back about 16%, and then lo and behold, it's back up about 10.5% since its drop. So Bitcoin, basically you didn't really miss much. One thing that I grabbed from a show that you guys put out, Frank, over the holidays was this quote from CZ from 2020. CZ said, "Waiting for the new headline to be Bitcoin crashes from 101K to 85K." And CZ wrote this in 2020. And look,
I know we didn't even have a proper drawdown from 100.
Not really. Like we came back, but only what? Only what did I say? 16%. Like I was expecting more.
These are quite typical, right? I mean, even in the bull market, you have several. If you look at the past 3 cycles, several 25+% drawdowns in the price of Bitcoin. This one, I think, felt a little more painful given the holiday season. But to your point, it's not unexpected, right? You have that tech sell-off. You also have sort of the Wall Street going offline for the holiday season. And this season I've talked about this, it has nothing to do with markets, but everyone I talk about this with relates to it. You had Christmas and New Year's both falling in the middle of the week. So everyone basically took that entire 2-week period off, unless you were like, coal miner or something. But if you sort of, working in, information services or financial markets, like no one was really working the past 2 weeks. And that includes, sort of the pipes and plumbing of Wall Street. So you had a juxtaposition of like tax selling and everyone on the traditional side being offline. So that kind of like pulls liquidity out of the market. And so when you're going in one direction, you're going to kind of keep going in that direction. until, of course, the new year came. People are back to work, and the inflows are coming back in as well. So you kind of saw a quick reversal from that drawdown to whatever it was. I think 91,000 was the lowest print. But in hindsight, it makes a lot of sense, right? I think that people need to maybe unplug a bit during the holidays, because I felt a bit of nerves and anxiety. And I saw, I mean, if you look at financial press over the last 2 weeks, Bloomberg had two different stories that said like basically the same thing, like Bitcoin's losing its fizz, or investors are cooling down on their Bitcoin positions. And it's like, I mean, the market's basically offline to all things considered, but we're so back, I guess you can say.
You just love it. You just love to see, though, the media, mainstream media, can't help but they're attention grabbing, and they're going to go one or the other way. They're either going to celebrate that
Yeah,
we're high, and they're going to point out that things are crazy and that fart coin is hitting new all-time highs, or whatever meme coin, or they're going to slam us. It goes in one of two directions, and it shows you do really well to take a break and just put it aside. You don't miss much sometimes, so that's a good thing. Let's take a look at ETH just to get up to date on the ETH price. So ETH sitting at around 3,800 now. Oh no, what are we at right now? We're actually at 3,700 right now as we record this. This comes out in a few hours. But ETH, Bitcoin drops 16%. Well, ETH is going to drop a little bit more. The altcoins are going to feel a little bit more pain. ETH dropped about 25%, but then bounced back 17%. So not all the way back to where it was before the holidays, but on its way back. Again, I think same sentiment here, showing that this was a part of seasonality, a part of end of year, everybody taking a break, but we're on our way back up. Definitely not the end of this bull run. Everybody should still feel pretty good. I'll move on to Solana. Solana had a little bit more of a drop because Solana peaked really early. Solana peaked like in when did Solana peak in Q4? It peaked in November, mid-November. So it saw a bit more of a drop down, 34% from that high in November, which was its high was like 260, 263, I think it hit, and then dropped down, hit as low as like 175. What a nice trade that would be in if you could have got, maybe not quite 175, 176. That would be really nice if you got in there. And then boom, up back to almost 220 now as we record today. Yeah, fairly standard, pullback,
yeah.
and
I
not a
mean,
massive one.
everything's kind of tied to macro, right? Bitcoin drawing down from 100,000 was part of a broader story of a global risk asset December sell-off, right? And then once you sort of got some relief in the U.S. dollar tied to basically a rollback of some of the stuff that Trump has said on U.S. tariffs, you kind of had a broader dollar gains. And so I think that, like, interestingly enough, a lot of this was tied to the holidays on crypto's front. Obviously, the drawdown was a bit more painful, so I think that that's tied into it. But there's also, I think the markets are getting a bit more bullish on the Trump trade, of which Bitcoin plays a key component. So I sort of think about it in those two respects: the holiday seasonality, tech selling, and also sort of the market regaining some confidence in broader macro. But that's the question, right? Like, if you turn on financial TV right now, the question is, can we have a fourth year of 20% plus gains in the S&P?
It seems insane.
Which seems insane. But that's very much tied to, if you look at the connection between crypto and U.S. equities, if the S&P were to not do as well, then that would suggest that crypto also has a bit of an issue.
Yeah, and even though it seems insane, I think we've had some shows in the past where we've talked about how we're in we've been in this current macro environment since 2008, when the money printer really turned on and the the Fed started to really control the inflation rate by using the interest rate, and then also by printing a lot of money in order to stimulate the economy. So we've been in that, but there's a slight difference. Since 2020, it's been a little bit different as well. So it's possible that we could have a fourth year. And all signs are indicating that like it's going to go in that direction. Everything still continues to look good from the macro perspective when we look at the year ahead. And that's obviously Trump hasn't even taken office yet, which we know that based upon what happened last time he was in office, things should go pretty well for the economy.
Yeah, and obviously, the one thing that's top of mind for a lot of investors is the extent to which sort of this money printing regime impacts sort of what we call inflation hedge assets, which
Mm-hmm.
many investors consider Bitcoin to be, at least in the medium to long term, alongside gold. And over the past, I think since 15, gold allocations increased by non-bank investors globally, according to the research from JP Morgan that you alluded to. It was about 1.6% in 16, and in 2024 we ended the year with 3% allocation. So you're talking almost a tripling of that, and that's really tied to this idea that the reemergence of this debasement trade, and you've also seen that in the appreciation of gold over the past year, which is interesting. And so when you have that underpinned by what a lot of large investors are suggesting in terms of Bitcoin allocation, this is a really nice setup. You've had Fidelity Canada to tip a hat to your, I guess, your roots up north, suggesting that a 3% allocation to Bitcoin for certain portfolios isn't unreasonable. I think BlackRock has also said something like 1%.
They said 2%. BlackRock said 2%. So yeah,
pretty good, even better.
Exactly.
And that's a lot. That's a lot of money. So you have a good sort of. You have there's three things. There's three things that I've written about over the past year in the newsletter that are super important when thinking about why Bitcoin's going up or down. The first of which is flows. This is the one of the most important things. I tweet, and it's kind of a joke: good flows, good price; bad flows, bad price. And so when you look at the end of, I hope I'm not going all over the place, but there's a lot of moving parts. When you look at the back half of the last few weeks of the year, right, you had record outflows of these funds, of these ETFs. Bad flows, bad price. I think we've clocked in some positive flows at the end of last week. Good price. But I have said historically that flows are just part of the picture and not to pay too much attention to that. And I'll get to that in a second. But the second piece obviously is macro. So, and you can just think of that as like what the S&P is doing. The S&P is doing really bad, then you're likely going to have a correlation with Bitcoin price and the long tail of crypto assets. And then the third component is politics, and the amelioration of the disastrous political environment in which Bitcoin had found itself was Trump sort of getting reelected. And there's a whole host of issues that likely could solve, putting on the table the grandiose ideas of a national reserve. There's some very basic things that it means, and that basically is turning off the sort of power switch of this, hands of an angry god level assault on the crypto industry by the powers that be, including the likes of Gary Gensler and Senator Elizabeth Warren. And even still, we're seeing the sort of tentacles of that
Still, I know. I know.
Rip the market. I think I saw on Twitter, I haven't confirmed it, the FDIC sent out a notice like 25 global financial players that they still should not provide a wide range of services in crypto, including prime brokerage, custody, et cetera. Anyway, so those are the three things to think about. And in 2025, a lot of those macro is still an open question. Politically, it seems like we've got a bit more clarity. And then flows is something to keep an eye on. And in terms of flows, getting back, I'm doing the what's the thing that Trump says? He does the not the recall in his interview with Joe Rogan. He says he does the pivot back. I forget what it was.
Yeah, I don't know his term, but yes,
I'm pivoting. When you think about flows, right? This is a story that's going to pan out over a long period of time. You saw a huge influx of investors, mostly probably folks that are investing vis-a-vis their like self-directed brokerage accounts or their Fidelity accounts or whatever have you, individual investors who are bullish on Bitcoin for whatever reason. There's still a whole host of capital that's tied to the wholesalers of Wall Street. And so these are the folks that sort of like push product onto the IRAs and FAs. And I'm not an expert on this, but I play one on TV, whole host of people that are plugged in that I talk to. And when you think about these wholesalers, a lot of them are only still in the early stages of pushing these products onto their respective counterparties and clients. And you got to think about why this is a long process. There are 10 different, I think at least 10 or 8 or 11 different products. So, I mean, at the very least, these folks have to buy into the idea that a Bitcoin ETF makes sense. Then you've got to think about which product do I use out of the whole, 10, Galaxy, Bitwise, Itbit, Gemini, or Grayscale. You got to think which product works best for your clients. Each of them have different fees. Each of them have different approaches to dealing with like forks and whatnot. And if you're working a wholesale division of like Morgan Stanley, these are Herculean questions. Do I need to set up a wallet? How does it work? And so you got to get through that. You got to get through the management committees, and you can kind of get a sense of like how big of a tall order this is. And that's 12 months out from what I can tell. Mm-hmm. And so once that unlocks, then you see a huge pipe into the flows. And so I see that being, alongside the political environment, a positive for Bitcoin's story in this year. Again, macro is always just, really know. It's just finger waving in the air to an extent. And that can change with a whole host of different things, ranging from geopolitical to sort of the political climate, and whether or not, there can be some cohesion among Republicans in a very tight Congress. So those are the three elements. Flows, again, very important, but try to think of them in the long term, because there's so much work that is yet to be done in terms of like plugging in the trillions of dollars that sit in Wall Street to our nascent capital markets. Mm-hmm. That process just takes a long time.
Yeah.
So it's all super interesting, but that's how I think about the market going into 2025. On the political front, you're talking about potentially basically a green light. And this isn't a green light to do whatever you want. It's a green light to do something. Mm-hmm. Over the past 4 years, banks were effectively not allowed, and you saw this in the work that Nick Carter has done, to do anything with crypto. And they were effectively able to sit on their hands in that respect, to not do anything. Now they don't have that excuse, which is very powerful. They can't tell their clients, well, we're not allowed to, because now as of Jan 20, you really can't use that excuse. So at the very least, starting this month, they're going to have to start, and this is not on the ETF side, this is more on the custody, prime brokerage, trading side of things, start to explore how to enter this market. And that's a story that dates back to 2017, when a lot of these banks, from Morgan Stanley to Citi to Goldman, were exploring ways to facilitate trading in these assets. And that was put on ice in the Biden administration. And now they've got to re-engage.
Yeah, I think there is so much capital. Everybody listening to this show will often make the mistake, and I think a lot of people in this space make the mistake of thinking, oh, everyone can buy Bitcoin now, right? It's an ETF. Can't everyone buy it? And as you pointed out, no, a lot of large institutions, a lot of big money, a lot of pension funds, a lot of these funds that play it very safe. And then also a lot of the banks do not give access to their clients currently, because this stuff takes time. And so the flows, the pipeline just gets bigger and bigger by the day. And I think we don't even really truly appreciate how big it could get in the coming year with all the aspects that you mentioned all playing together at the same time. It's I've never been in such a bullish stance. I mean, it's funny. You come back over the holidays and I feel like I'm stuffed with turkey and I'm a little bit slow, but I just, the energy is so strong, and on our team, and I'm curious to know on your team, but everything I see over at the block seems like you guys are also feeling really good about this year.
Yeah, and there's another element that is almost secondary, but also quite interesting, specifically pertaining to our crypto capital markets. So this is separate from the three elements that I delineated in my pontification ad nauseum before, and that's just the state of our credit and lending markets. So when you think about previous cycles where Bitcoin surged to all-time highs, so 2021, that was really underpinned by a go-go fervor of just a lot of mishigash and craziness. Ties back to sort of credit element. So you had a lending market in crypto that was maybe 25 billion, 30 billion, something like that, if we're using Genesis as a proxy. And so the sort of trading activity and the valuations were very much propped up on a lot of froth and bad credit. And now effectively we have no institutional credit market in crypto. So when you think about, and I don't know, people might disagree, but when I think about if I juxtapose the two, I think about the latter being much more organic and real, because you don't have sort of like trades put on via bad collateral and credit. Backroom deals where people basically sign a piece of paper that say that they're good for the money when they're really not. That's effectively gone. I don't think that it won't come back. I mean, if it does,
it'll come back. That'll
be good. But I'm saying it just doesn't really exist right now. So we're at 100K without sort of like, the 3 arrows, and without the sort of like leveraging FTT as collateral to take out a $2 billion loan to invest in a bunch of Fugazi startups. That doesn't exist. And to me, that seems quite bullish, right? Because it just feels more robust, more natural. And then it feels bullish because if we do have credit come back, it's probably going to come back in a more responsible way with collateralized loans, but most importantly, better collateral itself. A lot of people think about the credit crisis. Well, actually, a lot of people probably don't. It's probably me and like 10 other people. But when I think about the credit crisis, historically, I've thought, well, it was a lot of under-collateralized loans, when in reality, and I've talked to Josh Lim at Arbalist, it wasn't so much that folks were lending on without in an under-collateralized fashion. It was that these loans were collateralized and then they quickly became under-collateralized because the collateral saw a precipitous drop in value. And so I think in 2025, as the credit market reemerges or emerges out of the ashes of the phoenix, as it were, people will think more smartly about the type of collateral that they take. And there'll be more robust collateral requirements. So you'll have a stronger lending market, and credit's very important to any sort of efficient marketplace. And so that's a fourth element. If I were to think about some more crypto market structure specific bullish points, and when I speak with a lot of these lenders, so that's like Galaxy and Kraken and Coinbase, the word that I hear over and over again is conservative, it's slow and steady. Many of these firms don't even want to talk about their financing capabilities because they don't want to be overrun with clients. So it's a totally different environment in that respect. And I think that will prove to be beneficial in the coming year.
Yeah, 100%. Yeah, so well said. I want to talk about Coinbase. You just mentioned them, and we've got some Well, first I got I gotta bring up a tweet that you put out the other day that I just loved. You said, "Give a man a fish, you feed him for a day. Teach a man to buy Coinbase with his self-directed brokerage through his 401k, and you feed him for life." This is
It's bringing back harrowing
great quote.
memories to when I actually had to figure out how to do the self-directed brokerage. This is not financial advice by any means, but it's interesting. I'm not very good with technology in many respects, so that was a challenge. I had to like reconfigure through Slavic, and then you can set up a Fidelity self-directed brokerage. But I began allocating to Coinbase mid last year through my self-directed brokerage for my 401k. And anyway, I'll get to why I think Coinbase is cool. Obviously, I know the management team, and I think that it's one of our strongest companies, and they really have served as a pillar and stalwart in and out of various bull markets. But the thesis was quite simple. I knew that Bitcoin in the long run would do well, and they're sort of the largest capital markets player in the space. So I thought they were super undervalued for what they were early last year. I mean, I think the stock was trading at like $40 or something, and the valuation would have put them at like 20 billion. And this is in the wake of like when companies like Binance and FTX were raising capital or seeking capital at like, I think in the bull market, Binance was looking at 300 billion to do a capital raise. So it just seems super undervalued to me. And I thought, worst case scenario, like is, just draws down. It's my 401k. It's not taxed. So it's not a big deal. Draws down 50%. I'll just put in the S&P or something, or take the loss. But I think about the stock historically. Wall Street has never really understood it. So every single price target is like always
Yeah,
way too low.
let me pull this one up here quickly just to give some numbers what you're saying. So here's the projection of what their Q4 could do. Somebody's projecting it could be 2.2 billion in rev and $6 earnings per share. Wall Street is projecting 1.6 billion in rev and $1.13 per share. So Wall Street is possibly 37%
Yeah.
under on rev and 437% under on earnings per share
So
projection.
historically, it's always been Wall Street has not done a great job tracking this stock. And what's funny is it should be, at least historically, it should have been fairly easy because you just sort of take the trading volumes and project out from there. But the one key component is the take rate that the firm gets on different type of market participants. And for the longest time, they would look at like the volumes that we can see, which are on Coin Market Cap or whatever have you, and you'd sort of take that and sort of do some back of the envelope maths on how much of that is institutional, how much of that is retail, because the take rate's different. But then there's also the prime brokerage component, which is off a darker market, I guess you could say. And that can really change the game in terms of what they're doing from a trading revenue perspective. And that's through Tagomi, which they acquired, I think, in 2020. In 2020, yes, when that whole prime brokerage war really kicked off. And so I think Wall Street, it just like doesn't do a good job of holistically looking at its trading revenues. And then there's just a whole host of other elements that like they don't really pay attention to, like base, like their venture portfolio. I mean, even the fact that like at the end of the day, there's a lot of interconnection between crypto and artificial intelligence. And, when you look at comps on the AI side, like they're ripping with haste. And I don't think that Coinbase benefits from that same tailwind, from that same story, that same narrative. So there's a lot of elements that make it really attractive, in my opinion. And I just don't think that the people covering the stock can fully appreciate that, namely because, and this is sort of an important component, a lot of the people that cover Coinbase, so these are the equity research analysts at like Wells Fargo and Bank of America, and I think they have a bunch of analysts covering the stock, like 20 plus. They all cover like CME and CBOE and NASDAQ. So they cover traditional US equity markets or US equity exchanges, I could say, options exchanges. and it's just like it's not apples to apples. And so they're looking at like the opportunity strictly through the lens of like exchange, and Coinbase in many respects is like not just an exchange, right? I mean, it's if you lean into their marketing, right? Like they're building a new on-chain economy. There's a stablecoin component. There's payments. There's AI. There's NFTs. It's a much bigger story. So I think it's a really compelling equity.
Yeah. Not to mention that Coinbase will be joining the S&P 500, which will obviously give exposure to Coinbase to a lot of investors who are maybe not going to actively go invest in Coinbase, but because they're holding the S&P 500, they'll
Yeah,
be
I
in
didn't
there.
even know that. Is that true?
Yeah.
That's crazy.
Yeah, it's super exciting to see. I mean, it's one thing after another. It's one thing after another. Frank, absolute pleasure to have you on the show today. Before I let you go,
my pleasure.
Any final words of wisdoms? You've been through many cycles before. I think this is your third or your fourth cycle. As we head into this bull run, any final thoughts to share with our audience?
Just don't forget to tip your waitresses.
And take profit.
Yeah, always take profit. Make sure to withhold for tax season.
Withhold for tax. Don't round trip. Take some profit and tip your waitresses. That's Frank Chaparro for The Block joining us today. Thanks so much for listening in, everybody. I hope you had a fantastic holidays. Happy New Year's. And we will see you again tomorrow on the show. Until then, have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.